Hello, today is December 19th, 2023. In this video, I'm going to go over Ethereum and the fourth quarter update. Before we get into it, I want to go through a disclosure. All the information that we're presenting today is for educational purposes only and should not be considered specific investment advice nor recommendations. Cryptocurrencies, futures, options, Forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of that initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Hello. My name is John Slazis from Dharma Capital Trading. So we're going to continue on with Ether here and coming into the end of the year and how market's positioning for a new year, and this is part of what's called settlement. So I'm going to get into a little bit of what that means, and then we're going to dive into the market and take a look at what the structure is doing. Dharma Capital Trading is a proprietary trading and research firm. And you can visit us at dharmacapital.trade. Follow us on X, YouTube, and Substack. Reach out at info@dharmacapital.trade if you have any questions. Everything that I'm going to go over here today is on our fact-based trading approach. So basically all the decisions that we make are based on objective data and analysis, and we do this to reduce speculation and subjective biases. And this is what we provide our clients as well. And the resources that we have are our analytics, which help to standardize your decision-making process, our applications that will normalize our analytics into your workflow, and then our trader development, training, and education, which will help to optimize your tactics. So our method is consistent across all asset classes and time frames. It's always the same. First thing we always do is identify the context, what defines the state and the characteristics of that state. And then we highlight the alignment, of the price structure that define where those states will change or persist from. Where's the market making those decisions? And based on that state and structure dynamic, we get an expectation, and we put that into an if-then of what's more likely to occur. So if you like this video, please share it and like it. Follow us on YouTube. Come to our website and test drive our analytics. So again, before we go into the analysis of the market, we're going to do a little education here, and we're going to talk about time phase structure. So time phase structure is part of the price discovery process that divides a time frame into segments based on behavioral characteristics. And so in the last video, we went over different structures: price structure, time frame structure, and market structure. And here we're talking about time phase structure. And time phases are broken into basically four segments. We have an opening phase, a discovery phase, a validation phase, and a settlement phase, which is the phase that we're currently in right now. For Ether, we're in the December is the settlement phase for the year, and also the last 2 weeks of the quarter are the settlement phase for the quarter. So we're coming into a unique time frame, and the market's going to behave differently during that time frame. And so we need to be aware of it, and we need to adjust our tactics, especially as we're teeing up for a new year with new structure. It can always be a kind of a questionable time. And, for settlement, it's the end of the time frame. It's the period where some open positions must be closed for the purpose of settlement. The settlement phase price range is an important reference point for the next cycle of price discovery. So how the behavior during the settlement phase is going to affect the behavior during the opening phase. The key of our method is that it incorporates a statistical outside view, which helps slow down the decision-making process to minimize biases. This concept was highlighted in Nobel Prize winner Daniel Kahneman's Thinking Fast and Slow. Great book if you haven't read it already, where he says that, the outside view offers more accurate predictions than the inside view. And basically, we live our life making intuitive decisions. But a lot of the times, our cognitive biases can get in the way and kind of skew that decision. And so a lot of times we need to take a step back and analyze things and have a benchmark to do it. And that's what our analytics do. They provide you that statistical benchmark. So as you're going around making decisions, it's not based on emotion. You've got a benchmark fact check to see, okay, what's true, and now I'm going to make a decision. What we do with these facts are our strategies. And so looking at this from a net long mandate, for long-term investors, holders, looking for a transition to Web 3.0 and above, we're looking to accumulate more digital assets. We want to do that where our risk is best defined, so we're going to have accumulation strategies. We also want to reduce profit giveback. Markets are volatile, they make big profit surges, and they take them away just as quick. So we want to have some strategies that we can protect some of those profits and still maintain our net long position. We also want to hedge against negative momentum shifts, especially if there's a potential that they could be a sustained shift. We may know we have to sell some assets for a venture or a purchase, and so depending on when that time will occur and what the state of the market is, these could be triggers to lock in some gains as well and protect us from downside risk, more of a hedge. And then we may want to apply some leverage. So when the market does start to take off, starts to move, momentum starts to pick up, and we didn't accumulate everything that we wanted to accumulate, we can take advantage of positive momentum shifts. So I'm going to go over these strategies in a real general sense today and then get into the markets. But just so you have some concept and how you can use the structure to execute these types of strategies to optimize a net long mandate. The strategy themes we're going to focus on are fading momentum. So, we identify a structure point and we're going to fade momentum into it. So we're going to enter in front of it, typically using limit orders. This could be done with spot, derivatives, or options. We're going to trade momentum breakouts. So we identify a structure point and we get a breakout through that structure point. And we are also going to execute what's called a reversal signal, where we wait for our market to break structure and then stabilize back through the structure before we enter it. So in an accumulation strategy, we're going to apply both fading momentum and momentum reversals. So we're going to identify lower structure points. If we're looking at a market in a positive trend, we want to buy low, sell high always. That's our main strategy. So in a trending market, you're going to have price structure that's going to build positive structure, and we want to buy off that structure. We're also going to identify key inflection points that if the market is in a corrective state, we're going to wait for that market to take out that structure before we start to accumulate. So we're going to let the market tell us that the positive momentum is ready to return. And so that'll depend on the context of the market of when we want to accumulate. For our profit giveback strategies, we're going to flip it. And we're going to look for our upper structure points to fade momentum against really key structure. Market's coming into a major key area. It's had a big move into that area. We're going to anticipate a pause or a rejection. And then we're also going to follow momentum moves. And as they violate structure, for potential false breakouts. So our reversal strategy on the sell side for a profit giveback, the market takes out a major structure point but can't sustain a trade above it, we're going to execute a reversal strategy and we're going to lock in some of those profits. For our hedge strategy for negative shifts, if we see a market that is unable to hold momentum to the upside and it starts to break momentum, we're going to participate in downside breakout shifts for both short-term and long-term shifts in momentum. And we'll also look for opportunities where we can jump on the market if we don't get a break. So the market starts to stabilize or starts to make a move. we weren't able to accumulate everything that we wanted to do, or we just want to participate in adding leverage on short-term basis, we're going to look at for both short-term and long-term areas of where we might want to accumulate more or put on some additional leverage. So as we go through the structure of Ether at the end of the fourth quarter here, I'll be referencing these different areas for potential strategy adjustments. All right, let's get into it. Okay, we're going to build on the analytics from the November 9th initial publish, and we're just going to update here for the end of the quarter and where we're at. So last time we identified this, basically 2200 area as a key inflection point. That was the breaking point for this big negative momentum, kind of shifted things, turned us into this lower corrective action, big sideways action, and contained the market, and we've now violated that. So this is a break in this negative structure. So this is a positive signal, so positive to more sideways, basically, but not down. All right, so let's take a look at a couple things. I'm going to put the time frame structure on. This is another interesting thing that came into play, that we attained the previous year's midpoint. So the midpoint is a good momentum level. So as we're talking about momentum shifts, this is a momentum number. We are coming near the end of the year, so all this structure is going to change, and we can take a look at that by viewing the current year. And so that was the current year high. So we have, basically 2400 in Ether is a big momentum level to the upside, and it's more likely going to stay that way as we come into the new year. So we can, basically that's the strongest upside structure point that we have. And then we had on the current year, which will be, next year's, we'll be keying off that. Basically the midpoint's coming in around 1800. So this would be our accumulation area down here at 1800. So we have, defined structure here at 2400 and 1800. Now I'm going to add the yearly sentiment bias. So this is what we published at the start of last year in January. And so the market, had rotated around that area, pretty sloppy. This is all kind of corrective. And then we're making a move through that. And so let me put our critical range up here. Last time we spoke about segment moves. I'll put the interior structure there, and we highlighted this, 2290 area. So basically this whole zone here from 2400 to, basically that $100 area, 2400, 2300 area is containing the market. This is a half segment move, so it's not a lot of volatility. You can see, last year we had, multiple segments. Here's a full segment, two full segment move year. Basis the yearly structure. So we're coming near the end. This structure is going to roll, and more likely with this positive shift, the sentiment is going to shift up with it. Being above here is positive. So we're really at a crux point here. Are we going to just go sideways, or are we looking to extend? And that's what we're teeing up and positioning for the new year. So December is the settlement month for the year, and this range for December is going to influence how we trade in January. So let's start to dial in a little tighter, take a look at what's happening basis the quarterly structure. So to keep this real simple, we're looking at the quarterly sentiment bias. So this is the over-under number. Buy breaks above here, sell rallies below here. Started out the quarter with sentiment above the market. We came into it and then we had the November 9th post saying we needed to respect this structure. We did. We got our rejection. Now we've transitioned through it. So this is a shift in momentum. We're coming near the end of the quarter, so we don't have a lot of time left to really, how much follow-through can we get? Or are we just going to go into the end of the year in this big sideways mess? That's the question. What I've done here with this red triangle is identify the settlement period. So this is the settlement phase. It will last through, it started on the 15th, and this will last through the end of the year. and this range will be significant for the start of the new year. And we can see that, basically we've got this, at 21.25, let's say 21.20 area. Basically this week's lows are a good structure point to the downside. I'm going to put on the current quarter. So what will happen is once this quarter ends at the end of the year, we start the new quarter. If we did that today, this would be the new structure, and then wherever the close would be, the close would be here. That would be our structure, and we know that this quarterly midpoint is going to be a key momentum area. So that's coming in around the 1950 level. So currently we are at sentiment, and as long as we're above 2154, Ether's good, and it has the potential to retest the 2400 highs. Trading below 2154, if the market can't maintain a trade above this 2150 level, it's more likely we're going to retreat down to 1950 area. And this would be an accumulation area. And so if we put our critical range back up and our validation points, basically it's coming right back into that same zone that we were identified earlier. So what's more likely to occur is if we aren't able to stabilize above 2150, we'll get a rotation back down to 1950 or 2000. And the market's making, a positive move here. So just based on price structure, we would expect, higher move lows. The market trading, stabilizing basically above 2200, it's a different story. More likely we're going to do this digestive action up here. Bottom line, since we are above sentiment, we're positive, and there's always the probability that we could get an extension like this. So at any moment, any bid, we could get that extension. And if we did get that a new extension, just a charge at the end of the year, one of these nice moves, start to build positive momentum, we're going to look at some of the lower time frames as well, and that's what will gauge that momentum. And we're looking at an extension up to at least, the 2600 area. So the market has made a big decision, got above that, broke that structure point that we saw. It's climbing the price map ladder, and now we transition positive. So we're just dialing down the time frames, and now we're looking at monthly. So we're looking at the monthly structure. And so you can see here at the start of December, the market basically closed near its previous month high, and then we took it out, and immediately we took off. And it's interesting that this corrective move that we've seen came back to the previous month high, so you can see how this market is respecting this structure. And so that's a key inflection point, and that comes into alignment with our quarterly. So we have our quarterly sentiment bias. It's basically coming in right there. Let's take a look at our monthly sentiment. So monthly sentiment was way below the market for December. At our downside pivot, we'll put the critical range on. And so here we had a momentum shift breakout, and that move targeted a full segment move up to the upside target 1. Put our validation points down here. So just following along here from our previous post, we had the breakout, market attains its target, and then here we get a break-in structure. So at this point, the market is telling us that the rally, this impulse, is over, and we're in for corrective sideways action. So here's where the fact foundation comes in. We've had an upside breakout, market attained its target, we had a break-in structure, now we get a negative signal, and it stabilizes above the previous month high. It stabilizes above the 2105 critical range positive level, and we get a bounce back, and we're basically digesting. So all this action is corrective, and it was sparked when the market broke structure here. So it said we're not trending higher anymore. We're either going lower or sideways, and so we're going sideways. Typically, this will influence the market into the next month. So until we get new structure, the market basically had its move. Couldn't fall through to the downside. So more likely going nowhere on the monthly structure, either we're going to firm back up above 2200, which is in alignment with the quarterly, and make a play for potentially the highs, or are we going to rotate back down and come down to the 2000 level? So we had that 2000 level, and then the 1950 is coming into alignment with the previous monthly midpoint. So we have good alignment with the quarterly and the monthly. So this is really the story coming into the end of the month. We've got the quarterly sentiment bias at 2154, previous monthly high. So let's just say this is 2140 on the low point. And then we've got the 2203 upside pivot on the monthly. The market's taking it out, but it's still a great zone. And so you can really look at the 2200 strike and really the 2150 strikes. That's your consolidation area. And if we're going to go linear sideways, we're going to rotate within that area. Once we get a move outside that area, and now the market's going to, that's going to be the play into the end of the year. So as the play into the end of the year, going to, push up to 2400. We know the market's positive, and it's definitely, and here's that structure breaking point. So that's also in alignment with 2200. So anything above here, it's potential go time. Anything below here, it's sideways down to here, and this would be your accumulation area. So to summarize the alignment, basically keying off of the quarterly sentiment bias at 2154, that's our line in the sand. Above here, we like the market absolutely above 2200. That gets us above that breaking point and has the potential for the market to re-engage this positive momentum. We've gone sideways, absolutely, where the expectation is more sideways into the holiday period, and then maybe kind of gear up as we approach the new year. This sideways action could absolutely continue into the first week of the year, really, and start to make a move in the second week of January. So this is our momentum level. So this would be a leveraged opportunity to kind of jump on any positive momentum, and you can use some shorter time frame structure and kind of keep an eye on our posts from X. This is our profit give back area, so 2400. So getting the surge up to this area, this is going to be the hurdle for any new extension higher. What we, again, market did break that major turning point level, so that is the market. This would be a kind of a pause for the cause. More of a slowing, but absolutely above here. That's another momentum leverage opportunity. Trading below 2150 is a sign of more of this action, digestive action, and where would we anticipate a base to come in? Around 2000 strike, and that would extend down to, let's say, 1970, maybe even a little further. But expectation would be for the market to be basing here, so this would be the kind of the accumulation area. And if we aren't able to stabilize here, a negative hedge strategy scenario would be, initially starting here down to these areas, which is more of a short-term opportunity, but something to be concerned about is if the market can't stabilize here, we could see a retreat down to the previous quarter midpoint or the quarterly directional at 1718. So just one more look at the quarterly structure with those bands I put in. Basically, as long as the market is stabilizing above the sentiment bias, it's positive. The validation point at 2379, the CRX plus, the critical range extreme, positive. That contained the move. It remains the key overhead for an extension higher. The market has corrected. It has pulled back. So this is a half segment move back to sentiment. So this is kind of normal stair stepping, just like we challenged here and we pulled back. Similar situation here where we broke out and shifted above sentiment and we pulled back here. So this is a profit give back, tighten up, but then momentum shift here is a positive leverage. We do get market isn't able to base above this level. It's going to extend this corrective action, more of just a pause into the new year. And what's the expectation? Expectation is going to base here off the CR plus, and actually move higher. So just kind of shift up, more focusing in on the previous quarter high. this price structure and some of the lower time frame alignment. So if you appreciated that video, please like it and follow our YouTube channel. You can also follow us on X, as well as subscribe to our YouTube and our Substack. For more information on our analytics and applications, go to dharmacapital.trade and see how our fact-based trading solutions can improve your market state clarity. Enjoy the holidays. Cheers.